All right, here we have PA10 from your textbook. We're going to use the information given to prepare a complete statement of cash flows. Up until now, we've just looked at that first section, the operating section, which is the hardest to prepare. Now we're going to do the entire statement. And the data that's given here is more likely how you're going to encounter the data. See, they're not just giving you exactly what you need, which is nice in life. They're giving you what's called a comparative balance sheet here so that you can calculate any increases or decreases. In the last problems, it would say like accounts receivable increased by 5,000, right? Now you get to calculate and see if there was an increase or not. Okay, so that might even be the first thing you want to do. So maybe take a minute, you can pause the video and just quickly jot out those calculations, the change from last year to this year. Did the account from last year to this year increase or decrease in value, right? So accounts receivable, just by eyeballing it, we can see that there was an increase, right, of exactly 3,000. It went from 35 to 38. Okay, so you could write that. So give that a chance. Go ahead, pause, fill in the rest of this little column I've added on. All right, there's my figures. I think the hardest thing was just keeping my lines straight. But I went ahead and identified, it was kind of interesting, they were all increases. I didn't have any decreases. Looks like this company was growing in every single one of these, or in this case, there was no change. I didn't have any negatives. Okay, so that's what we do for the comparative balance sheet, which this top part is right here. This is a comparative balance sheet. All right, because it has our assets, our liabilities, and our equity. Okay, then we have additional information that we're just going to need. Some of it will come from the income statement. Some of it just needs to be told to us. That's down here. All right, so let's go ahead and start setting up our statement of cash flows. So of course we need a header. Gotta have that. So there's the name of the company, name of the statement for the year ended. You'll notice here for the name of the statement, in parentheses, I put the method that we're using. We said there's two methods, direct, indirect. Most companies use the indirect method. And honestly, if I didn't say it here in the parentheses, the two methods look so vastly different. You would be able to tell in like a second, I guess, if you knew what you're looking for, which method the company was using. But your book identifies it in the header, so I'll go ahead and do the same. All right, we said the statement of cash flows has those three main sections, operating, investing, and financing. So we'll start with operating, and we say cash flows from op activities. You can write out operating, sorry, I guess I shouldn't be lazy. Operating activities. So we just identify what the user is reading. This is the first section, and it's the operating section where we're going to list all of our cash flows. We said we're using the indirect method, which starts with net income. So now you can see why they needed to give us that net income for the year, $98,000. So I'm going to push that out. 98,000. Yay, done. All right, now comes that long sentence where we describe the adjustments that we're going to make to net income. So now we say adjustments to reconcile net income to net cash flow from operating activities. Activities. Do you have to know that sentence? Yes, you do. One year on the final, I had a student and they had to prepare a statement of cash flows from scratch, right? And he got this far and then he's like, that really long sentence I just cannot remember right now. He knew something should go there. He just could not remember the actual wording. All right, so we're explaining to the reader what we're going to do. And then let's go ahead and put our adjustments. I gave you depreciation as your first adjustment. So depreciation expense. So let's look for it in the data they provided to us. You can see right here, depreciation, 12,000. It's our first adjustment. It goes, remember to imagine as if these were separate columns just like on the income statement. All right, we've got depreciation expense. That's your first adjustment, right? So if you want to remember the adjustments you make for the operating section, it's depreciation, or technically non-cash expenses. The main one that you'll be seeing is depreciation. The other one is current asset, current losses, but I might do that one here, current assets and current liabilities. And then we have losses and gains. All right, now we might not have each one of these every time, right? Especially this one, gains and losses. Well, let's check. There's a couple ways we could see if we had gains or losses. They'd either tell us here, or 100,000. So we don't have anything about a sale, because if you had a sale, that's how you know you're potentially going to have a loss or a gain. That's how we get our losses and gains, right? By selling something below or above book value. So we're not told we had a sale. The other way to check, I'm going to accumulated depreciation. The difference is 12,000, which is what they said depreciation was. If there was a difference between that, that could also potentially mean we had a sale during the year. Anywho, so I've checked everywhere I could possibly check. We have no sale, so therefore no gains or losses for this company. And we already did depreciation. So now we're going to look for our current asset and current liability changes. Remember that nice matrix I gave you? We'll use that here. And so let's figure out where our current assets are. So current assets are going to be here to here. Notice they didn't label them for you. A little tricky, huh? Current assets, and then here's our current liabilities. And that's just based on our knowledge from, I think it was chapter 5, when we talked about a classified balance sheet, what was considered a current asset, items that are very liquid and we expect to use or collect in a year. Current liabilities are obligations we expect to pay within the year, right? And I know accrued liabilities is kind of new for you. When you see it, the default would be current liability. All right, so we've got our current assets. We're going to use that handy matrix that I gave you guys. Current assets, current liabilities, increase in balance, decrease in balance. Right, that little matrix. I think students do use this because sometimes when I would get quizzes or exams, I would kind of see students have jotted that in the corner. So I think it's helpful for you guys. So we're going to really use that matrix now for this adjustment. We've already identified the change, right? So now we're just going to write down the account and the direction of its change. Okay. The interesting thing is we're not going to do cash because we're trying to prove cash. And if we do this right, this will actually serve as a check figure for us. So exclude cash from your adjustments. So the first current asset we have is accounts receivable. So you'll say AR, and it looks like we had an increase, went from 35 to 38. AR increase in balance, right? According to your matrix. AR is a current asset. We said we had an increase, so we're going to subtract the difference. So $3,000, so minus $3,000. Okay, and if you're like, why do we subtract it? Go back to the video that I made explaining the matrix where I showed journal entries for each one of these adjustments, and that might help you. All right, next we have inventory. Again, everything seemed to increase for this company, so it was also an increase. It's my cat scratching in the window. Inventory increase, 1,300. Since it's an increase, we're going to subtract it. All right, so we did current assets. We got these guys. Accounts payable, AP. Like I said, everything increased, which is a coincidence. Don't think it's always going to increase. AP increase. Look back to your little matrix. If it's a current liability and you had an increase during the year, you're going to add it. Add the difference. So our difference we identified was 1,800. So add, and then we have accrued liabilities, also increase, and that difference was 3,500. Okay, so we got that. Now we've completed everything in the operating section because you have 3 adjustments for the operating section. Depreciation we said there were no gains or losses, and we just did all of our current asset and current liability changes. go ahead and total that up. I get 13,000. Remember to add it to your net income because net income is part of the operating section. So add that, you'll get 111,000. We have to identify that line, as I mentioned in a prior video, we call that net cash flow from operating activities. Well, there's a couple different ways to say it. You can say net cash provided by operating activities. Your book just says net cash flow operating activities. So I'm fine either way you show it. Okay, yay, we did the operating section. I think I'll make a part 2 to the video since this one's running long, and we'll do the investing and financing and the little end cap to finish it off. But don't worry, the operating is the biggest part.